Okay, so this is where we are yesterday, and like I said, we talk about starting from risk management, and Coach Claire will do justice on that. I just want to say little about it and how those stuff relate to we setting a trading strategy for ourselves. Like I said from the very beginning, that an SMC trader are traders that trade with the banks. We try to copy what the banks is doing, and we do according to it. And because we are doing that, we have to follow a particular trading style. We have to follow a particular trading style, which is purely follow the market structure. I talked about the market structure the other day, which is either the structure is bullish or bearish or consolidating. I talked about it, I think, 2 days ago. So currently now looking at this chart, if I want to trade, good. So building a trading strategy like what I want to teach, start from the higher time frame. Let me say I want to do swing traders. I'm a swing trader, for instance. I trade weekly. Using my strategy, this is exactly what I do. I just come to the time frame and I move to 1 week. I take the time frame to 1 week. So once you take the time frame to 1 week, you'll be seeing something like this. So because I'm seeing something like this, I would likely say for the past week, the market is bearish. Why did I say the market is bearish? I take my highlighter tools. I'll say this is the high that lead to the low. Why is it no highlighting? So if I take my highlighter tools, highlighting, I'll say this is the high that leads to the low, then an high that leads to another low, then an high that leads to another low. And this is also an high. So we're expecting this high to lead to a low here somehow below. Why is my highlighter to having a funny color? So I'll take it back. This color is so funny. So this is the high that led to a low, then an high here that led to this other low, then an high here that also led to this low. Well, why it's not? Then an high here that will also lead to another low. So because I know this is also another high, I'm expecting it to have a low like this, so that it will break this structure, since this has actually break this, and also this also breaks this. So what did I mean by it break structure? If you could remember, I talked about, where's my part tools? I talk about the market doing this, doing something like this, then like this, then like this, then like this, then like this. So I talk about the market doing something like this to show a bullish momentum. And if the market is going down, I also talk about the market also doing something like this high. Remember, I talked about this in the last class, and this is exactly what the market is doing. So the market is doing a low, that is a lower low, a lower high, a lower low, lower high, lower low. And because it's doing that, it's doing what? It's breaking structure in every part. This is a structure break. This is a structure break. So if I want to take this trade, I will expect the market to come back and take me back here to this point here, then also come down like this. So once the market comes down like this, it has given me, I have to like bring this bush and take the part two. Take the part two. Let me take the long and short. Let me take the rectangle. Good. I needed to take all these things so I will not be going up. So because it's doing like this, I know this is the part twos, This also break another structure. And this has happened. This is the same thing I draw here. That's the same thing that has happened in this candlestick here. So once I see something like this, the next thing I want to do, I can take my trade from weekly. I know I am looking for a bearish move now. So I come down to daily. From the daily time frame, what has the market doing? You see, it's clear now. Let me delete all this drawing. So with the daily time frame, it's clear now. You can now easily see the exact thing that I'm saying, which is this is the high. It led to this low, then this up, then this down, then this up, then this down, then this up. So I'm expecting a down back again. That is exactly what this market has been doing so far. There's no difference between the structure I draw before and the structure currently. So this is a structure point, and the market has been following the exact trend that I want to see from the beginning up to now. So what did I want to do now? Now I understand that this is a bearish move. I can likely also say that this is my order block. Why did I pick that as an order block? I'm telling you exactly what I look at without hiding anything. So if you know you do not understand anything, please stop me. Call me after when time for question. Just keep jotting down your question down. So this is the low. Definitely, what candlestick led to that low? This is the exact candlestick, which is this one. Let me zoom in so you see it better. This exact candlestick is the candlestick that led to the low. So what did I do? I take that candlestick. Oh my God. I like that. Leave me. So I take that candlestick. That way, I know I'm coming for shorts and I long for shorts, which is sell. I put my this thing a bit above the distance. Then I make sure my TP passed the structure. So this is a proper 1 to 3. And if I have taken this trade, this is what will have happened. You see, the market just come in, tap me in, poof, and automatically this is a profit trade. But currently, because the market has happened, and again, as a swing trader, I'm coming from a swing trader perspective. You see where I'm coming from? I move from the weekly to the daily. So a swing trader will likely take their trade either from the daily time frame or least they come for 4 hours. That's the least they will ever do. So let me say I'm a swing trader. When I mean I'm a swing trader, that is, I allow my trade plays for a week before I take my trade. So on the 4-hour time frame, you see everything is now showing very, very clear on the 4-hour time frame. So instead of using this plenty order block, imagine how big it is. If I am to now trade from 4 hours, if I'm to take the trade from 4 hours, what I will do is, this is the low, simple, this is the low, that led to, this is the lower high that led to this lower low, then it breaks this, it causes a change of character. Let me put it there so you'll be seeing it. Okay, I have to take my lines, my line, horizontal line, and horizontal ray. Good. Thank you. So this is the high that led to the low that caused, oh my God, you are not the one I want. This is not what I want to trend line. Good. So this caused a change of character. I've talked about what change of character actually mean. Talked about it. White. I'm sorry I have to be setting this because this is not my real trading account. So this is the low that led to a change of character. Then there is another low again. If I took my highlighter tools, this is the low that led to this low. It changed this character. Then it brings another low here that led to this low. And another low here that led to this low. It changed this character. Then the market comes again, tap into this low and lead to this low. It changed this character again. Forget about the market going back up. Going back up here does not mean the market is now bullish until a particular low is being taken out. What the market do here, the market only want to take out all these points as a liquidity zone. Why? This is an equal highs, these are equal highs, and this is also another equal highs. It shows there's a lot of chunk there. There's a lot of people here. There's a lot of people here. One, aside from the fact that there's a lot of people there, I'm sorry, I've gotten a lot of rubbish on my chart. Let me see how I can delete some. Aside from the fact that there's a lot of people here, you can also attest to me that, you can also agree with me that there's an imbalance, a little bit imbalance at this top here. What does imbalance mean? Imbalance means the market must always do this. Market must always do this. It must not give gap. So if the market do something like this, that means you don't have to take this trade. You don't have to take your trade from here. Because if you take your trade from here, the market will take you out. Why is the market taking you out? Because the market has not completed the move. The market will still have to come back, take all these people out, and get to this point, then come down again. So because this did not complete the move, this place becomes a trap. It's something you cannot learn in a day, but I'm trying to like put everything together in a day. This place becomes a trap. This will not be the valid order block, which the market will come and tap into and do the move. We can also take a look at that. I'll make sure I share everything. Look at it. Delete. Oh Jesus, I've deleted on my chart. So that way, the market saw these points, which is this imbalance zone here that has not been filled. Then what did the market do? The market comes, tap into it, and start coming down again. That's taking out all these points as liquidity because this is an equal zone. A lot of stop loss are there. This is also another support zone. A lot of stop loss are there. The market has been rejecting that place for long. See, the market has been rejecting that place for long. So what did the market do? It's angrily go back into it and take it out. So definitely, even if I say a chart like this, I won't have take it. So what will a swing trader do? A swing trader will take their trade from this zone, which is long position, short position. I know we are selling because I will never go and buy in this kind of market after saying the structure that structure is bearish. So what will they do? They will have selling. They are not selling to even stop here. They are selling to go above this like this. But they will likely want to stop at this point like this. So this is what they are. And with this, automatically, you are getting a risk to reward of, saying this is up to 1 to 5. This is up to like 1 to 5 or 1 to 6. This is what the swing trader will do. Now, let's take it to a day trader. A day trader will never take their trade from 4 hours. Where will they take their trade from? They'll go down to 15 minutes. So a day trader don't use weekly as the swing trader do. The swing trader look for weekly time frame, then they move down to daily, then they take their trade from 1 hour. A day trader starts from daily time frame, then they move down to 4 hours, which you have done, then they move down to 1 hour. So they look at 3 hours, 2 hours, but I'm trying to like rush everything. So come to 1 hour. If you come to 1 hour, you ask yourself this simple question. You see, it's clearing now. It's now very clear now that these points are liquidity zone. Let me use this long line. You can see a retest, the market come, a retest, the market come, a retest, the market come, a retest, a retest. So there have been a lot of touch and touch and touch on that zone. So what the markets want to do is to now fully take out that zone to tap into this point. Again, looking at it very clear, look at this point. This point is also another imbalance that has not yet been filled, although this actually tap into it and did the move. But because of the large chunk of liquidity around this place, and I mean liquidity, I mean money, a lot of people have entered the market from this point to push the market down. Some people might have not even go out at this point, So some people might have gone out from this point. So if they have not gone out, the market's going and tap all of them out to gather more momentum to push the market down. If I play this market down, I can bet you that the market will come down to this point. But before I do that, I want to like keep taking the trade downward, downward, downward. So on the 1 hour time frame, it shows clearer that there is an imbalance here, which is why I left this here. There's an imbalance there, and the market comes and tap into the candlestick that led to that move. And like I always say, you must make sure your stop loss is a bit above your low. Like imagine I put it here and I take this trade, the market will have taken me out. Market will have taken me out. And besides, this is even greedy. The stop loss is too low. So most times I love taking it like this so that I'll cover all the chunk or whatever that is there. So I'll be on a safer side. So this is how but the day trader, like I said, this is for swing. The daily time frame people, what would they now do? They leave the 1 hour, they come to 30 minutes, 30 minutes. I'm still talking about using the SMC strategy. It's just you simply following what is the trend and what the trend is saying and keep moving on with the trend. So let me say, for instance, I do not know this. I do not know all this has already happened. And although I've been doing my technical analysis from the daily time frame, I've marked these parts. And I see the market comes here. So let me say I want to take a live trade. I see the market has tapped into this, and I want to take a market as a day trader. And I can see a change of character here. I can see a change of character here. So CHOCH. That shows it's like they are now sellers in the market. So did the market tap into this? No. So because the market has not tapped into it, I can now see that point as admitter. I can now see that point as a valid reason why I will expect the market to come back and push down. But I can't take the trade also from the point of 30 minutes because I want to leave the market immediately, the market at the end of the day. Also, I can also see that I can also tell myself that if the market will break this point, it gives me far more confirmation that the market is coming downward. If the market will break this point, it gives me far more confirmation. Then that way I can now call this an internal change of character, which means I'll add an I. But for now, that's like my change of character. So I come down, come to 15 minutes. So as a 15 minutes, I can now see this is the low, this is the low, this is the low that led to this. It changed this character. This is the point that changed the character. But the market did not tap into that point. So if I've taken this trade from here, I will have missed the entry. Please, can you mute yourself? Good. So I will have missed the trade from here because the market did not tap me in before it started doing anything. Then this is the low that led to this. Then another low here that led to another lower low. The market came, all these points becomes a liquidity because they are just chunk, and it weak all of them out and did a proper move down to this low. It comes to this one again now. It's doing another low. So like I said, if I want to enter this trade, I wait for a proper confirmation on this. Okay, let me see if you can wait. Let's play the market and let's see what the market will do. How is it not playing? Can you guys hear me?
Yes.
Yes,
we can hear you.
Oh, okay. So, man, this is the market got a break here. So because of that long break, the market has left too. Look at the market has gotten to. So there's a long break here. So even this break too is also another point in market whereby we can also call an imbalance zone because we didn't see anything that happens there. And we can now wait for the market to come to this point. And one of my rules is don't take another block that have an imbalance above it. So I rather wait here because I can see an imbalance here, or I do my trade like this. But if I do it like this, my pips is now too big. So what I do is that I just wait here. So if we play the market, expect it to go back. Let's see if it's 5 minutes is too small. 15 minutes. This break in this market is a big something. 15 minutes. This is long. 30 minutes. I'm trying to see if it will be fast. So like I said, I'm expecting the market to come up because I didn't know what happened here. So I can't really say something will happen here or anything happen here. So that is like a big break in the market. So we expect the market to go back up, 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 up. Remember, also remember, this is a point. This is a point that we can enter from. But according to my rules, don't take a trade that has an imbalance above it. So I'll just keep it down for us to just take a look at it. The market has filled this imbalance. So this is no longer valid. The market has filled this zone. Like I said, it must come back to fill it. And sometimes the market can also react from the imbalance zone and do the sell sometimes. So like I say, you are not the owner of the market. We just anticipate. You get, we only just anticipate that this is what will happen. But until this happen before we take our trade. If this do not happen, we are not taking the trade. So let me say, for instance, let's take a look at this. Let's keep it like this. I'm not taking any trade. I'm just like playing the market. It's a test. If the market respect us and give us a move, that we have to wait and see. This is wasting time. 30 minutes. It's leaving us. You see, all these are like reasons why I don't trade from 15-minute time frame. Okay, it has come into this. You take it out. Do you take it out? Take it out. Yeah, take it out to feed the other block. Do what you want to do now. Spend a lot of time. Look at where you spend a whole lot of time there. Mhm. It's like the buyers have taken over the market. Expect this zone. Push up. This is taking so much time. The market is so slow because all these candlesticks are actually pushing. All these candlesticks are like 30 minutes, and despite the fact that it's 30 minutes, it's not really giving a proper move. Like I said, if I enter a trade like this, like I don't really know what will happen, but I will have just gotten something around this. Looking at also coming back to this down. So this should have actually been, like I said, I will never take this because there's an imbalance here, and I expect that the market will feel the imbalance. And by feeling that imbalance, it will take me out of the market. So I look for the next order block at the top. And like I also always say, don't put your stop loss like this. It doesn't make any sense. It makes you, because the market will want to weak out that point. So it's always good you take it above the destined before you enter the trade. So something like this is what day trader look out for. But for somebody like me that wants to enter the market and go out immediately, I trade properly from 1 minute. From 1 minute. So just imagine how wide this is. This has taken a lot of time and a lot of effort. So what I just do for my 1 minute, I don't look out for all this long distance. I come to the exact, where's the recent low, where's the recent high. After I've looked it from 4 hours, I just peep 4 hours. What's the market going? The market is bearish. Wait, let me see back. Let me not assume. Let me not assume. I come to 4 hours. I have to delete everything. Ah, it's no longer bearish. Or is it still? Okay, it's still bearish. It's still bearish. This is the this low takes out all this liquidity. It respected this zone. It came down. It come back here. Will it now respect this zone? So I want to ask myself that simple question. Will it now respect this zone or it respects this zone? So what did I want to do in the market? I'm looking at these two zones or these two zones. So if the market do what? If the market comes and take these guys out, then automatically I'm no longer selling. I'm not doing what? I am buying. So what I do, I have marked out the zone I want to trade from. Then I automatically comes to 1 minute. It comes to 1 minute. Because I trade as if I'm scalping. Maximum 30 minutes I should be done trading. That is always my goal. Maximum 30 minutes. So now when did this is the candlestick that tap into the other block I'm looking out for. So after you wick it out and you tap into it, I look for a change of character to confirm my move that this market wants to now sell. And what did I see? I can see this. I can see this move that changed this character. Good. So after this move that changed the character, I'm not in, let me say I'm not in the chart, the market has comes down here. And I can see another move again to keep confirming my bias. I can see another move again. That's to change another character. So what will I now do? As a 1 minute trader, I look at it from here. And from here, I likely go like this. What I do where is sell, short position. So I want to cover all this totally. Good. Then I expect something around there. And okay, let me sell this. Let me place an order. So now I'm placing an order and I have a 10K account. Look at the estimated loss, $100. Why? I'm risking just 1%. Look at the estimated profits, $381. That is 1 to 3.8, almost 1 to 4. This is what risk management is all about. So you talk about risk management, they are telling you how to do the numbers, how to do the math. So even if I lose this trade and I lose my next trade, that is I've lost $200, and I win one trade, that is I've made $300. That is I've recovered my $200 loss and a profit. Now if I lose 3 trades, I know I've only lose $300, and I win a trade like this, I know I'm in profit of $81. This is what risk management is all about. About risk management is not about the kind of lot size you use. No, 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 no. Like when somebody tell me I have a 10K account, what kind of lot size should I use? I cannot tell you that. The only thing I can tell you is you have a 10K account, risk 1% of your 10K. If my, like, look at this stop loss. Currently, my loss size is 1.3333. If I reduce my stop loss, my loss size will increase and I will still reach the same $100. So automatically, so that's not what I'm saying is it's not about the lot size, it's about you risking 1%. So if your stop loss is long, your position sizing will reduce. If your stop loss is short, your position sizing will increase. And if your lot size is big, the bigger money you make. So that is why most times I'm looking for a small stop loss. And where can I get a small stop loss is on 1 minute time frame. 1 minute time frame will give me very small stop loss and at the same time give me more money. So if it's taking me out to take me out quicker, if it's giving me profit, it gives me profit quicker. So let me say, for instance, have I taken this trade? I've taken this trade. So let's play the market. Let's play the market. Let's see if it will go back up. Let's see if it will go back up and tap us in. See, the market did not go back up. What does that mean? I lost the trade. I lost that chance of taking the trade. In the sense, the market did not tap me in before it did the move. Where did the market comes to tap in? The market tapped this. Looking at it from the angle of this is the recent low that led to this, that did what? That breaks this structure. But because I am seeing, why did I choose this place to take my trade from? Why didn't I choose this place? Like I always say, anytime I see an imbalance, I fear for my trade. I feel like if I put my entry here, what if the market come and fill this imbalance and take me out? So that is my own bias. But you can decide to, okay, I want to enter the trade from this recent low. But if it takes me out, then I will target this other up. Understanding the fact that the market is still bearish. I understand the fact that the market is still bearish. So I am not taking the trade because I feel like the market is going to go down. I know that the market is going down. So the market did what? I was expecting the market to come up to fill this imbalance. Not as if I did not see this. I saw this, but I did not put it for the market to come there because of just that one reason, and which is my own bias, and my own rules. So sometimes I miss trade just because of my rules. Why sometimes I I escape losing a trade because of my rules. So you need to now know what kind of rule do you want to set for yourself. Me, I said to myself that any other block that have an imbalance above me, I will not take it. So that is why I couldn't take this. If not, this is a see how massive it is. Just imagine we take the trade like this. Very short. Why is the stop loss this long? Okay, I will likely want to cover all this. Even if I stop here. This is a massive profit. Whereas the market went as far as this. So sometimes if you want to take your trade, these are the reasons I look out for. First of all, I look out for what is the structure of the market. So once I can build a bias around the structure of the market, I look at the high, the low, the high, the low, the high, the low, the high, the low. Where's the recent low? Then I enter my trade from there. I just hope you understand all this. This is what I want to talk about, building a trading strategy for yourself. I talked about it from the initial stage. And if you take a look at the time frame from just here, see, this is like 6:52, February, February 25. And the same February 25, this is 10 o'clock. So it's just like from 6 o'clock to 10 o'clock, you are out of the market, you are done. So totally, if I want to make money, I will have made $300 or $400 just from this trade within 6 p.m. to 4 p.m. I am totally done with the market. I have no business with who else is trading, who is no longer trading, who is coming back to trade. I don't take much trade. I only take one trade per day. One trade in London session, maximum 2 trade per day. That is, if I come back again and I see another move that makes sense like that, I entered again. If not, I am done for the day. Because if I make $400 in a day, I'm done. I wait for another next $400. Risking what? 1% of my account. Just 1% of my account. So I know that if I'm losing, I'm still fine. Because I know the moment I win one, I'll cover up all my losses. It's just like last week. Last week, yes. Last week I lost all the trade I took. This week I win all the trade I took. And I was about 600 to $700 profit. If you are in the Zirius Academy, no, not this training academy, the community, the Zirius community, I shared everything then. I shared when I lost and I share when I win. I was like, oh, last week was so bad. But this week I made crazy profit. I haven't passed my prof sim account. So this is exactly what I do on the chart every single day. And that is the same thing. You can go ahead and do the same thing and the rest. Let me see what else is on the day four. So because I want to round up the four. Risk management, Claire talks about it in minutes I give out the thing. So leverage and margin. We have talked about leverage from the very beginning. And like I say, I don't risk more than 1% of my accounts. I don't risk more than 1% of my account. The lowest I go is sometimes I even have to risk 0.5 of my account. 0.5 of my account, maximum 1%. Maximum amount I risk is 1%. That's how I manage my leverage and my margin. So risk management, Claire will talk down. Basic trading on psychology, Claire will also talk about that one. So I don't want to um be too much on the conversation. So if you have any question for me regarding this, I think before Claire comes up, let's do it the question first. So is there any question for me? So because this call will end soon, so let's treat the question for this. Then I'll drop the link for tonight's class. Any question? Any question? Is there no question? I think I should stop presenting. Good. Okay. This like there
I
is
think there's a
message on the
question in the
chat.
chat box.
Okay. I'm trying to go to the chat box now.
This is our markets. Would we be able to pause and play its movement?
No, no, no. On live markets, you can you can't post live markets. Can't post live market. What I show you now is currently not live market. Is what has happened in the past. I only show you what has happened in the past. So I'm showing you the past data, what has happened in the past, and to show you how I enter my trade, so that it will not just be like I'm just telling you this is high, this is low, this is high, this is low. So you see it for real how it plays and how it works. So that's why I have to use that. You can't post live market though.
Thank you so much. Does anyone else have any other question based on what has been done so far tonight? The market is not moving so fast. It will almost be paused on the higher time frame. So